Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zak's Traders Cafe. Today I'm joined by Ivan Murphy, who's Executive Chairman at Harena Rare Earths. How are you today, Ivan?
Very well, Zach. Thanks for having me.
We haven't spoken for quite a long time, and to be honest, apart from missing you, I also wanted to know what the progress was at Harena, and obviously also a little bit of the state of the rare earth market at the moment. But we are speaking in the wake of your completion, of the announcement of completion of a pre-feasibility study, and just wanted to know what's going on there.
Yeah, so listen, we've made a huge amount of progress since we last spoke to you, and very pleased about that. That's kind of culminated in last week's announcement around the PFS, which we've summarized for the market and made that RNS, I think, at the beginning of last week, was it, or the week before? So we're very pleased about that. And I think what that's given the market is just some hard facts about our project, a lot of which we've been talking about, but it's not the same as giving them the raw numbers. I think the big takeaways have been just the scale of the project, and also the cost of production, because the big problem in rare earths is confusion and apples and oranges. Yeah. So grading is confusing because it depends on your mineralization. So, we're just trying to always stay focused on educating the market and our investors about what we're about and not be distracted about the noisier areas of the rare earth space. So this has allowed us to do that, show the scale of our project in terms of the tonnage we'll be producing, and of course, for the market and the investment point of view, our NPVs. So, they're coming in at between 340 million and 600 million, depending on which price decks you use for rare earths. And we can talk a bit about that in a second if you like. But, either way, we've a billion plus of revenue over the life of this mine. It's very commercial with payback in sort of 3 or 4 years. And, on our market cap of, okay, gone better at about 15 million pounds, that's a significant gap between that and any normal discount you could apply to our NPV. So we think that's been great to be able to get that into the market. Also, that our capital cost estimate is about $140 million. So it's very low. And that, again, keeps pointing towards the differentiator that we have in terms of ionized clay rather than hard rock, or rather than projects that are more difficult to access. So we are heap leaching in on site, so like it isn't, as I always say, we're not blowing up stuff and we're not crushing rocks. That's not what we're doing. And once you take that out, it becomes much more environmentally friendly. And of course, your processing becomes much, much cheaper. The other thing we've been able to do is just split out the scale of our heavy rare earths. This is the big thing in the market, the heavy rare earths, and exploiting them and delivering them is complicated. And that's where the real bottleneck is. MP Materials, for instance, in the US, and they've had huge investment. They don't have heavy rare earth capacity. It's more around the other ones. So the heavy rare earths are still under very tight control by the Chinese. And so, we're just continuing to educate the market that this is what we're about. We're a heavy rare earth project.
Well, I suppose coming off the back of what you said, you've reminded the listeners, reminded me of the positives regarding Harena. But what's been frustrating, at least from my perspective, I've seen lots of companies who've were either in rare earths or have gone into rare earths after it became hot. And let's say their share price performances have been rather better than yours of late. Yours has basically been sort of steady where it has been in recent months with the dips and peaks and troughs. But is that something that you're concerned about? Is that something you think that the market will catch up upon? What's your view on that?
Yeah, we think it is catching up already. And, we're going to Indaba at the weekend, and we'll be doing the one-to-one meetings there over a couple of days. We have a lot of all incoming, actually, in fairness, at the moment, all incoming interest. So, our volumes have gone up significantly over the last sort of 10 trading sessions. That's been assisted by having appointed Marex, which we announced just before Christmas. I think we announced that. And also SP Angel, our other now broker on the research side. We've had their first flash note, and now they're following us. And John Mayer said very kind things about us on an interview this week. So, I think now that's starting to move, and we are starting to gap up a bit. And I think we'll get the value we deserve. Because you're right, there's no scenario where our valuation is anywhere comparable to the others in the space with projects of this kind who maybe either ahead of us or not even as far ahead as we are. So, yeah, we think that's coming, and this PFS was a big part of that. So it'll just take some time to push that through into the market and get everybody up to speed on that.
So you've got the A team of service providers behind you and the PFS out as well. But I think maybe the real sizzle actually was the news last month with the talks or progressing talks with the US government. I mean, the DFC is the gold standard, isn't it?
Yeah, we're delighted to be working with them still, the Development Finance Corporation of America, and that's been going on for the last couple of months. We're in a defined process with them, which they've already done for other companies like Macongo and others, where they have a sort of an up to $5 million project development finance piece, which is the sort of lower part of their investment interest, if that makes sense. So we've made our application for that. That's now being processed. They've had another internal meeting there, I think it was last week, and that's all moving along well. So we're very pleased about that, and we look forward to working towards a completion with them over these next weeks. And we've already announced that to the market. So yeah, so look, that just continues to validate the story. I think the PFS was a big part of that for them. They'd already had that obviously under NDA, and now we've been able to release that publicly, which has been great. So yeah, that's all going extremely well and all going to plan. So, look, at the end of the day, we have to just keep doing our work, keep focusing on our project, keep delivering the message to the market. If I could control the market, well, that would be wonderful. But the market is normally efficient in my long experience, and it does get there in the end, and quality will out.
And finally, a bit of a wobble in gold and silver and some commodities at the end of last week. What's the lay of the land as far as rare earths is concerned? And has it had that kind of bubble blow-off move that the other rather precious metals have had?
I'm so glad you asked me this question because I've been dying to talk about this for about 3 days. So, it's just another example of how unconnected we are to that in our space, right? So the gold price and the spot price of gold and all the different investment mechanics around it, why people want it or don't want it, and what it's used for, and let's face it, not used for, have nothing to do with us, right? And in fact, if you look at the noise in the rare earth and critical mineral space this week, we've had a huge announcement from the US government, another $12.5 billion fund that they're putting together with names like Mercuria and Traxys to build a stockpile of rare earths because of this problem and this bottleneck, specifically around heavy rare earths. So the pricing for rare earths is very opaque because of the situation in China. We don't have the information. It's very complex to understand their pricing points. And in the US, we do have a floor price because the government put a floor price on their deal with MP Materials. But that's very skewed towards the type of rare earths that they can produce at the moment, which are essentially non-heavy compared to us. So no, our pricing environment just continues to get better and better and better. So we are not on that same, we're not connected to them the way other precious metals are, like silver, which had another, wild run as well over the last couple of weeks. So, that's another market education thing for us. Critical minerals, which are the invisible infrastructure of power, whether you like it or not, and gold is not so much that, except in the economic system way, if that makes sense. So, our critical elements and the critical metal space is the invisible infrastructure of power because without it, you can't build defense. Without it, you can't be competitive in AI. Without it, you can't build robots. That's not the same for gold. So we're in a different trajectory to them. And I do actually believe in the gold story, but we're not that story. And so I don't think there's anything to worry about that. I think we could see recycling from people who've made huge amounts of money in gold into critical metals. And I think that would be something I'd be doing myself.
Well, you've just stolen my last question. So the rotation from gold and silver into rare earths was my last question. But
Well, I would add to the answer, I think it's the critical metal space. Rare earths are one part of that, but you've got other really interesting things in there like graphite and other things. So I think that the critical metals thing is where I think the rotation will be, and of course, a big part of that is rare earths.
Ivan Murphy, Executive Chairman at Harena, thank you very much indeed.
Zach, pleasure. Thanks for having me.